Good morning, good afternoon, good evening. This is Paul K. Dunn, owner advisor of J and Sons Cash Flow Advisors. Today's topic is going to be about early movers. Early movers get richer. It's a simple formula, simple math. The thing with early movers is they also sometimes take the riskier positions. Sometimes they get in place to do the first. And when you're the first, sometimes you're the one catching the arrows in the back. However, first movers, when the homework's done correctly, can be very significant, and they can make a lot more money than anybody else. Gary Vaynerchuk, one of the leading marketers, was one of the first people to be asked to invest in Facebook, and he turned it down. And look at what happened to Facebook today. So yeah, we live and we learn. At the end of the day, a lot of us have turned away from certain investments, and we've regretted turning away from them, and then we've pulled the trigger on other investments, and we've regretted doing that as well. This game is it's really that it's just a game. It's a money game, and the goal is to win the money game. And there's no way you can win that money game without being in it. And so early movers will benefit. Now, in our last video, we went over something very significant um, in our analysis, so to speak, of the, let's go to CoinMarketCap, in our analysis of BitConnect, which is a platform that just finally failed due to whatever complications it was having. We went over some very important rules and lessons about how to move forward. And looking at their story, something very significant that we looked at was what happened in the beginning of the early movers. So at the beginning, when you hit as far back as we can go is January 20th, 2017. And at that point, the coin released for price USD 16 cents, between 16 and 17 cents, pretty close to. So you could literally buy each token for 17 cents each. And anyone who did that and invested $1,000, what we found is that if they took advantage of one of the peaks up here at 430, I believe it went as high as 435. So if they took that peak out at about 430 after investing way down here, and they sort of set a mark where they wanted to get out. It went up as high as 442, but let's say they set a mark of where they wanted to get out at 430. And when it hit the 430 mark, they cashed out. That $1,000 would have turned into $2 million bucks. And the reality is there is no investment today where you can invest $1,000 and turn it into $2 million from January of 2017 to December of 2017. There's nothing. There's absolutely nothing. And if any investment that's remotely even close is reserved for what they call accredited investors, investors who have $1 million net worth or $200,000 per month, or per year, sorry, that they make $200,000 per year and up. It's reserved. They're allowed to participate in financial instruments that can get somewhere close, but none of them will reach those type of statuses. This is the type of market that we want to play in. And when we say play, it's really, we have to look at it as a game. Any sports athlete will not look at a loss as their last attempt at playing. You take the wins with the losses, and you get good at putting together a team that wins more frequently. Okay, so just the FYI on what's going on. Our overall plan is that we're going to be focusing on income producing assets. in the cryptocurrency market, things that pay us daily, weekly, monthly, on a regular basis. And at the same time, what we're going to do is we're going to use those same type of vehicles to mine popular coins and more stable coins like Bitcoin and Ethereum. So we're going to use cloud mining, and we're going to use lending platforms, and in some cases we will use trading bots. There's only 3 platforms in total that we use at this point. One of them is still under beta. Another lending platform is what you're looking at now that is about to release. And our final one is called Hashflare. That's where we do our cloud mining. Even though in a lot of these you might see that there's affiliate based incentives, for us, what we're going to do is we're going to try to stay away from any of those until we can find a way where everyone can benefit equally, because we go in as groups, and sometimes the person at the top of the affiliate chain collects from everyone at the bottom, and so forth, so on, so that the person that's always the person that ends up at the bottom, they usually end up with nothing. And we want to create a structure where if we're going to do an affiliate based move, we want everybody in the overall team to be sort of on an equal level. So, we all collect very similar results. Okay, so we're going to have an affiliate link that we put forth, but we want to be able to give that money back out to the group. So it's going to be a strategy where if we make a lot of money through affiliate based like the affiliate based structure, that money is going to go back into the group, and a portion of it is going to be reinvested for the group, so that you have a higher chance of becoming, I would say, a little bit wealthier with our intelligence, and with the fact that sometimes we'll be able to move a bit faster than you can move in the market, because we're so focused. And that part is where we want to make a different type of move. We've seen a lot of people benefit from the affiliate program, and in the worst case scenario where something like BitConnect, they offer an affiliate based incentive, someone makes over $800,000 just from the affiliate part alone, and they do nothing with that except for benefit themselves. To me, that's really just a slap in the face to everyone who supports that person, because without the support of everyone, on that team, or everyone who joined in, without that happening, that person would have never had those opportunities, or had that amount of money to be able to have a better quality of life. And so any affiliate programs that we partake in, it's going to be what we call group dynamic. And we're going to start to throw programs that allow for groups to be able to get in smaller amounts of money that add up to bigger amounts of money, because we're coming together as a group. And when the group thrives, the group wins together and they lose together. And it just makes for a better atmosphere, where when things happen, we can get stronger and sort of not be pulled apart. Okay, so our next platform, we want everyone to look at and do your own analysis on it, but we've done a lot of the analysis for you. Okay, so really we just want you to come behind us, pick up any concerns or questions that you may have, but this thing is going to hit, and we're going to be right here at the beginning. We show what can happen when you're in it at the beginning, and we want to make sure we're here. We're going to put in smaller amounts of money, and we're really going to ramp it up and get our money back out. If we're the fearful type of investor, we're going to take our investments back out. If we don't care about the money that we put in, we're going to leave it in for the long haul. But we're going to really run over the blueprint and the map of what's going to happen. Okay, so we'll just recap quickly. We're only dealing with cloud mining, and we're only mining Bitcoin or Ethereum. We're not messing with any other coins right now. Bitcoin, for instance, the news on Bitcoin is that next year, if all goes well, Bitcoin will be accepted at the Dallas Mavericks stadium, and that was put forth by the man himself. who owns the team, okay, from the Sharks. And right now I don't have his name, but his name will pop back up and come back to me. But he's working on accepting Bitcoin at the Mavericks, the Dallas Mavericks NBA stadium at the beginning of next season. Okay, so Bitcoin isn't going anywhere. And then Ethereum, the leader of Ethereum, Vitalik is what his name is. He's pulled back from his venture capitalist, I guess, his endeavors as a venture capitalist board member, so that he can focus on the problems happening in the Ethereum network. And we just really believe that Bitcoin and Ethereum are here to stay. With the smart contract part of Ethereum, they're really going to have very, very solid business case uses. And then with the Bitcoin, the way that it's being pushed into the new gold, more effective, more movable, a lot smarter than just buying gold. It's going to become a store of value. These two coins are long-term holders, and if we can get into mining where we get paid in Bitcoin and Ethereum over the long haul, then we can pull out profits and leave in, or we can pull out the original investments, leave in profits, and keep buying mining contracts to up our holdings. And at the same time, we can up our nest egg. The more you have saved in a complete, I would say, in a complete account. So the more you have in one place, the bigger your nest egg, the longer you can live off of it. It's really the difference between someone who invests $100,000 and they get a 10% interest payout every year. They wouldn't earn as much as a person who put in 10 million and let that pay out 10% interest. The bigger amount of money you have, the bigger the payout for your investments. And so we're only dealing with lending platforms that we believe are going to be solid. They're going to pay us back our returns, and then they have some other goodies as well where we could lend our money and get it back. Now, something we really do need to point out immediately is that this ICO that I'm looking at here, Thorncoin, is not potentially for the U.S. The U.S. regulations are scaring a lot of the new companies away because of regulation, especially if it has anything to do with lending, because the U.S. laws are very restrictive and they're trying to protect wealthy people. That's really the bottom line. At the end of the day, whether this is released into U.S. citizens or not, I gives no cares. There's absolutely no cares given here. Decentralized movement of my coins. My wallet is desktop based. When my coins come out of Coinbase and go to Exodus, there's no tracking from that point as to what I'm doing, where I am, and what the game's all about from that point. So once it comes out of Coinbase, it'll be going between Thorncoin and my Exodus wallet. It won't be going back into Coinbase at all unless I wanted to, or Gemini. It won't be going into those. So there will be no connection to the U.S. From what I do. I don't know how these guys will regulate U.S. citizens and how they will know. But at the end of the day, I will do everything possible to make sure that I'm here when this ICO takes place. No one will prevent me from getting rich in 2018 to 2019. My next 2 years are really focused on uncovering and hitting absolutely every opportunity that I can. So yeah, we just want to make that clear. This is not for U.S. residents. A lot of coins that are in the lending platform more than likely will be staying away from the U.S. because the U.S. are idiots. And at the end of the day, the government and the laws are there to protect wealthy people, and wealthy people don't like competition. And at this point, these type of platforms, while they are risky, and some people will do idiotic things like take out mortgages and then lose the mortgage, to the market because they have no idea what they're doing. Even though those things are taking place, the reality is let people live and learn from their own losses. They cannot come back and say, well, that's a scam and I want my money back. And I mean, when you're risking your money in here, and we're clearly telling people not to risk anything they can't afford losing, and they go and do it anyway, then they should really take the fire that's burning them because they put their hand on the stove, pretty much. So at this point, we don't need regulators telling us that we can't do this or we can't do that. And really what it's all about is taxes and collecting on things that, really aren't earned. The easiest money possible is just to tax someone. And that to me is theft as well. So at the end of the day, I'm going to play the game the way it's meant to be played. And this is really where we are right now. So I'm moving to Australia. So officially, I will be out of the country anyway. But for me, I was still able to sign up, and there was really no checks or anything like that as to where I was coming from or where I was located. They're just making it clear that this thing is not for the U.S. And if they run into any trouble, they could just pretty much X out any U.S. people that are out there causing trouble, or that they can spot on the platform that may get them in trouble. So at the end of the day, we're going to be around. If you're going to join in, if you're gonna come along for the ride, there's two ways you can do it. But first, we want you to make sure you come here. So this is going to be the website, and we're going to leave that in the links. This is the white paper. If you're a reader, do your best to try to understand it. After you read all of that, you can then come to our YouTube, which you're going to see the video on the YouTube. So make sure you like and subscribe. And in the Crypto Investing 101, you will see a specific video called My New ICO Uses AI to Trade, by the Oracle Team US Crypto Baller. He has done a very good review. He's very to the point with it. We all work together to help each other. He makes it clear as well that he is not your investment advisor. Investing in anything is crazy. Investing in any crypto is crazy. And what you're witnessing from all of us is just what we're doing with our money. And we're just sharing that with you, because we would hate to win and then brag about the wins without sharing beforehand. Okay, because a lot of us out here that are willing to take this risk, we will be winning. Okay, and then some of us will hide what we do or hide what we actually make just to prevent people from coming after us because we're winning. Because we don't believe anyone deserves our money. They don't deserve any more than what we're going to give them, because at the end of the day, we're taking these risks. We're here in the market. We're spending hours and hours to learn these things ourselves. No one else is doing this. No one else is out earning the money and giving it to us. So they shouldn't be allowed to take it or stop it. It's bottom line. And so we want you to come in. There's going to be an affiliate program, as we mentioned before. So you will see an affiliate link. So if you want to come up under the affiliate link, we will be launching what we call Group Dynamics, and we will use our affiliate link to give back to our group as best we can. And we will also use another portion of that to create opportunities to invest as a group, so that we get more in the market and get more from the market. These guys are amazing. So what we'll do is we'll go down to the dashboard here. And just see if we can locate some of the incentives that they're doing for us. We're going to have a pre-sale on the 18th. It's going to be 50 cents a coin is where it launches. And then every phase thereafter, phase 1, 2, 3, 4, and 5, and 6, the price will continue to rise a little bit. And those phases will take place from January 18th all the way up to about February 15th. Then it will go on to the exchange. And from there, it will launch to the world and hit a few more exchanges where the value can then rise up a bit more. Something that's pretty unique to this platform is the incentive. So they're starting their pre-sale on the 18th, and what they're incentivizing is that if you once it opens its external exchange and you're able to You're able to trade around the platform yourself. They're saying the moment that you get an opportunity to lend, they will pay you a certain amount for your token. So I will find that here so that I can read it straight from here. And then the other part is that if you hold a portion of your tokens without moving them, they will give you 12% a day for quarter one. Quarter two will go down to 11, quarter three, 10, and quarter four, 9. And they will also pay you bonuses for holding on to your coin. Staking means holding the coin and not selling it, not trading it or moving it. Okay. And what they want you to do is, I believe on February 5th, when they launch the lending right here, if you bought the coin for 50 cents, they will buy that coin from you for $8 on the February 5th. As long as you lend it back to them, they will buy it from you for $8 before the platform opens. And this, my friends, is almost guaranteed money from 50 cents or even up to $1 wherever they stop. You're going to get an increase February 5th because you're participating. This drives value. Yes, they're paying you to be a part of their platform, and I believe that that's what needs to happen in order for exchanges to be successful. In order for lending platforms to be successful, you have to pay your lenders well, and these guys believe in what they're doing. If you look at Bitcoin, I believe from January 18th to February 5th is almost a month. And I believe these guys from January to February, they were a bit slow with their movement. But from January to February, they went to 75 cents. It took them a little bit longer to get out the gate. They went to about $9 in April. So it took them about 3 months. Okay. But as things have begin to change, as the industry becomes a bit more understanding of how to launch these kind of platforms. We have another coin that launched in December that's a lending platform, same thing, but they launched at $24, and in December they were up to what, 58 still? By January, a month later, pretty much, they were already at 58, $59 from a launch of 24, and it only took a month. So the platforms are getting better at incentivizing people to use them, and the reality is they can pay out more and more consistently when everyone plays accordingly. And something that we wanted to introduce everybody to right before we get out of here is called Metcalfe's Law. And this is something that everyone should know about. Metcalfe's Law states that the value of telecommunication networks is proportional to the square of the number of connected users of the system. Okay, and what happens in Metcalfe's Law is that the more users that you have, this is what happens in Metcalfe's Law, and internet has begun to take on. This is how value is created. As the telecommunication company started, what they found is that if we only had 2 people using the phone, they can only call each other. So we needed to put more people on the network so that the network could expand. So as the network expands, now you have more people that can connect to each other. And as it expands more, you have now infinite amount of connections that can happen between people. So the more a network gets used, the more users on a network, the more valuable that network becomes. And that is exactly what's happening to Bitcoin. It's the same thing because it follows telecommunication law. Why? Because we're dealing with internet. We're dealing with software platforms, things that involve users. If Bitcoin could not make it to the other side to someone else and that person accepted, then it's useless. So the amount of users make up the value of any given thing. And that essentially is what Metcalfe's law is, creating more users. So what happens is there's a way to generate a massive amount of money by understanding that law and using it correctly. And we believe that Thorncoin has it. And there's some more little secret things in there that they're going to do for the people who stay with their platform. Things like they have a marketing budget, and they're going to pay they're going to pay 10% of that marketing budget to the people who are bringing in other people or who are marketing to other people. They're going to pay that marketing budget back out. And so it's just a lot of incentives to say, look, we need users. We really need users. We need lenders. We want the platform to succeed. Everybody wants their platform to succeed. And if the trading bot is bringing back daily interest, and paying you daily, paying on the amount that you lend, plus the token is going up in value, you're just winning all the way around. And that's really the goal for us, is win-win scenarios. So when we find them, we pay attention to them, we investigate them as best we can, and then we launch. As long as they're following guidelines and doing what they can do, then we'll play ball. So without further ado, we're going to close this out because we don't want it to be too long. But please come check everything out, make your decisions, because the launch is coming soon. Since it's peer-to-peer, as we spoke about that before, there's no regulations necessary, because we're just individuals contracting with other individuals, and we're on a decentralized platform. So there really shouldn't be any banks or third parties that should really be trying to regulate us in the first place, because it's almost like having a conversation between you and your brother, or you and your mother, but somebody else wants to be in the middle of that conversation to make sure that conversation goes where they want that conversation to go. We don't want all that. We're not playing with all of that this time. Not with my money. Not with my money. So all of you guys out there, especially those who have just experienced the Bitcoin fallover, it's all about timing. It's when you get in. Get in early. Take advantage of what you can. Get your original investment out. If you're okay, once you see that your original investment is coming back, you can put more money in. You try to keep getting your original investments back out so that you have a significant enough nest egg in there to make it worth investing in. But once your original investment comes out and you feel okay, you just make sure that you have very little of your own money left over. You can pull your original investment out, wait a month, let the profit roll up and do what it's going to do, let the lending add up and add up and add up, and then you can put the money back in a month later. That's really just how you alleviate risk. It's really how you walk around risk, because anything you invest in is risky. However, the higher the risk, the more calculated it is, the higher the probability that your results are going to be very good, and that your reward is going to be refreshing enough for you to continue on in the market. Okay, so our goal with these things is to create enough passive income where we can sustain ourselves for years to come, and continue to build things and do things that we love to do, because we learned how to invest correctly. So this is Paul K. Dunn. With everything in me, I wish you guys prosperity, success, abundance, and everything that you do. And until next time, I wish you good morning, good afternoon, good evening, and good night.